Hello guys, welcome to the Trading Parrot. On the 24th of February, I published this setup on Twitter. It's based on the RSI 4-hour. We had a falling wedge spanning all the way from 86 to around 40. We have an early breakout from here. Long story short, this ended up being the actual breakout that took us all the way to 90 on the RSI. I was never expecting to see something like this, but actually the target from a falling wedge is to reach the top of the falling wedge. And that's precisely what we did. Now, yesterday, I spot this head and shoulders again on the RSI with a neckline around 80, and the target was RSI 69 if it broke below the neckline, and that's precisely what it did. So we've been nailing it here in the channel, and if you want to see more content like this, make sure that you're subscribed to the channel and that you hit the notification bell. And do not forget to follow me as well on Twitter, because all the setups are coming first to Twitter. Today we're going to look into a bunch of different things that I find extremely important, starting with the rainbow price chart. This is going to give us a long-term macro view. I'll cover the monthly close of February, which has two things that are in particular very important. Of course, I'll keep you updated with the 4-hour time frame, what's going on with the RSI, what I'm expecting on the daily as well. And in regards to liquidity, I'll give you an update on some sneaky orders again that we are seeing here at 52. Those are appearing already on multiple platforms. I'll give you some insights on the fear and greed index channel that we've been forming. What's my expectation for the lower fear that we're going to see very soon, which in conjunction with the funding raise that we are accumulating across the board on all the coins in the market, is going to cause some unexpected scary times for some traders. So make sure that you're comfy, and I'm going to show you everything that you need to know right now about the market, not just TA, but also on-chain data and fundamentals. Let's get started. We just entered a new area in the rainbow chart, and we haven't been in this green area since about May 2022, when we were at a price of 29K. Since this is a logarithmic chart, right now that is sitting somewhere in between 57 to about 80K. One of the biggest misconceptions that people have when they see this kind of charts is that they expect that we are going to cover all the range from the blue up until the top, which is located roughly at 600K. And the best way to get rid of those crazy ideas is to span out and look at the full history, and you're going to see how clear it is that we are experiencing diminishing returns. It's been the case throughout the history of Bitcoin. First, we hit a top way beyond the red. On the next cycle, it was slightly less above the red. In 2017, we were right on spot on the last red band. And in the previous cycle, because of all the anomalies that we had from COVID, we ran out of steam very early, and we only managed to get to orange. If you also look at the bottoms, you can see that the bottoms were located almost in green here, then in the blue, in COVID, almost outside the band blue. And in this cycle, we are literally outside the bands in the lower end. So just following this chart, pretty much the logic tells us that we should be finishing somewhere in the green, maximum in the yellow area here. And this is ignoring what's going on with ETFs, what's going on with countries, recession, and everything, just purely looking at this model. If I had to forecast an all-time high just based on this, I will say that probably we're going to get somewhere 2.5 bands less. If we need to move 2.5 bands below the previous high here, that will mean coming from below the darkest orange, then the light orange, that will be 1, 2 in the yellow. So it will be somewhere in the light green band, which if we stretch a little bit further away, that could be anywhere between 80K to 120K. Again, that's ignoring any external factors to this particular model. If we do a linear regression, that's where we should be ending this time. February this year is printing new history. This particular candle here that we are seeing is the largest green candle that we have seen in a very, very long time. It's even bigger than the one that we had in October 2021. Extremely bullish, isn't it? Yes, but there's something I don't like about this closing price. If you're following me on Twitter, you probably are aware that I've been monitoring day by day before we close February what's going on with the price. And that's because I was really keen for this candle to close above the high of October 2021, because that's the highest closing price in a monthly candle for the history of Bitcoin. Closing above that will give a strong indication that we are ready to break all-time highs. The fact that we couldn't achieve it by $200 below, it doesn't mean that we cannot do it. But don't get disappointed, because currently we are entering the first days of the candle for March, and we are crossing above that limit. So we will have to see whether March is going to close above that limit for the first time, or whether it's going to act with the usual performance for March, which is biased towards bearish price action. In October, you can see that after this large green candle, we had 3 red candles following. Of course, that was the beginning of the bear market. But you can see that right after a candle of this magnitude, anything can happen. You could perfectly continue going higher towards a blow of top, or you could do what I would like to see Bitcoin doing, which is a strong pullback, resetting the situation, which is clearly an anomaly relative to the performance of any previous cycle prior to the halving. Let's focus on the monthly CPR. We now know the levels for March, and again, we have quite wide range for the prices for March. It's incredible, this range. This is absolutely mental. I've never seen a range of 66.3K for a single month of CPR. That is absolutely ridiculous. It means that from the point of view of the model of CPR, if we turn extremely bearish, it's pointing towards 25.1K. And if we continue bullish, we could make up to 91.4K. I hope you're sitting down while you're hearing these numbers, because I have never ever given in the past such a magnitude of a range for a single month from CPR. The actual pivots are located currently at 58, 55.6, and 52.7, meaning that we are allowed now to come down and visit those CPR levels during the month of March. Anywhere there will constitute a healthy retest, as long right after that we continue shooting back up. For the month to continue bullish, we must hit $69,566. The model says that to remain bullish, the minimum that you need to do in a month is to test the first resistance, and that is the first green line going up. And in order to turn bearish, we should lose the pivots and touch at least once $47,160. Just by touching that level, we are tempting the price to turn the pivots into resistance. We're going to continue monitoring the CPR throughout the month of March, so make sure that you're subscribed to the channel. In regards to the 4-hour RSI, right after we broke above this structure, we reached a level of 90. We broke below these head and shoulders, we meet the target, and right now we are doing some bounce here. Whether this is a dead cat bounce or not, that is subject to what is the price action going to do here. Is it going to challenge the previous highs? In that case, it might not be a dead cat bounce. But in my opinion, RSI 80 right now is going to be very difficult to break. And that's because we just had a breakdown below it. What is the corresponding price for an RSI of 80? For that, I'm going to set my reverse RSI here with the level 80. Let's enable it. And RSI of 80 puts us at $64,888. In my opinion, it's very likely that the RSI will want now to do some sort of reset to the downside. And an area that is very tempting to see the RSI retesting is where we just broke from. If we put 44 in the reverse RSI, let's put it in red, that is giving us 57.6K. So pretty much where the pivots of the CPR are currently located. In regards to the daily, on the 28th of February, we were about to print a daily high with the price action. During the day, the signal got invalidated. If we close today's price around here, we might end up consolidating this hive signal on the 1st of March. The target is for 55.6K. You can see that there's plenty of fair value gaps below the price, making this area very juicy for shorts to take profits. The RSI currently on the daily is printing this pattern that is bouncing about this trend line. I'm very keen to see what's going to be the reaction of the RSI that currently sitting at 82 when it comes down and resets at 74. The level 74 in the price, it's currently 60.6K. I'm noticing on material indicators, FAR charts on the 6 month, from the weekly you can see that 52K, it's quite heavy here, and this could be a level that whales are expecting to buy the dip. You can see how very close to the price, there's quite a lot of bags here trying to push the price down. Some people are expecting that at 68.8, pretty much the all-time high price, they can short, and some other bags are accumulating right above the price. Not as many you can see here in the support. Instead, we only have this level at 52. Looking at it on the monthly, it's even more clear that this started from the 28th of February and it's been consistently there waiting. On the 6 months, it's extremely clear. We can go to trading light and see that level is located again at 52K on Binance. There's 743 and all the levels attempting to short are again around here, right below the 2 deviation from the VWAP. At $70,070, you see another 700 in liquidity, hoping to be able to catch a nice sell. We have had 4 days in a row of extreme greed. Today we have extreme greed 80. Yesterday we also have 80. And if we focus at the chart since May of 2022, where we bottomed at around 6, right now we are at 80 here at the top of the range. And if you focus on this channel, it's very clear to me to say that we are at the higher end of what we can get from the grid at this time in the market. And most likely the grid should start resetting and potentially falling up until around 50, 55 into the neutral zone. That is just purely speculative expectation from me, just because this is continuously oscillating around this channel for the past 1.5 years. The fear and greed acts like a cycle. It's got mini cycles and long-term cycles. And if you look at the funding rate heat map, in here we have loads of the different coins from the market. You can tell that we are in one of those zones that is extremely overheated. We are not really crazy to expect that this should cool down and go back into the green. Not necessarily today, but maybe in the upcoming days. Ethereum versus BTC RSI is still in the breakout zone, currently sitting at 46. The price has faken out, disappointing lots of investors. This current weekly candle is threatening to be an engulfing red candle here on the price, which is quite bearish in my opinion, but the momentum still is pointing up. Whales are still in the accumulation zone. They seem to be withdrawing at a higher pace than depositing into the exchange, at least when it comes to the big whale explorer, one of my indicators. We can see that the delta has been since the 27th of February at levels not seen in a long time. We're currently at 1.4 million in delta. That means that there's quite a lot of liquidity below the price waiting to be taken. Unfortunately, when price is moving higher during a pump, all the liquidity to the downside is left for later. And the more people are shorting from the top, they kind of help pushing the price higher and higher and higher. But that doesn't necessarily last forever, and eventually the higher we went and the quicker it happened determines how big is going to be the correction and how painful it could be as well. Liquidity keeps draining to the downside, but nothing really significant. We are at a level of 85, which is below the trend line, below the moving average. We've been running up with reduced macroeconomy liquidity injections for about 22 days. without any significant correction. If you're following my channel, you probably know that I have an hypothesis that usually those divergences tend to last from 30 to 90 days. But eventually the price catches up with the divergence and there can be a significant correction right after. One of the biggest anomalies that we are currently seeing in the crypto space is that there's almost no interest from retail in Bitcoin relative to what the price is currently doing, which is almost about to hit an all-time high. And the way to explain that is because most of this run has been driven by institutions, large wallets from ETFs preparing to sell all that liquidity to their investors. Views on YouTube in general related to crypto are pretty low, and you're gonna hear on Twitter how many people are scratching their heads, not understanding how come we can reach almost an all-time high without any interest from retail. If we look at Google Trends, you can see that the interest on Bitcoin peaked at 44 during the ETF. But right now that we are doing almost an all-time high, we are at a level that is similar to what we've been seeing during the bear market. And this proves that the retail is still not here. And I tend to agree with most of the people talking about this topic. I think that is extremely bullish because it means that we still have dry powder to push higher during this cycle. So the question is, what is going to trigger the retail to come back and fuel the rest of the bull market to the upside? Do we need to do all-time high? Do we need to hold above all-time high? I think it's a combination of those. But most importantly, the liquidity that we have printed here needs to hit the pockets of the retail. And that's how they are going to decide to invest. At the moment, with all the inflation, most households are struggling to pay the basics, to pay for gas, to pay the rent. Every single thing is becoming very expensive. So that's the aspect that leaves me scratching my head. Okay, retail is still not here. We are about to hit all-time high. We need retail for the bull market to really push way beyond the all-time high. If you want to reach 150K, that's going to have to happen driven by institutions because retail, the normal people, are struggling to put aside savings at the moment. So I think I will continue to look into the liquidity. If the liquidity has a big spike, potentially that will land in people's pockets, and hopefully by then Bitcoin will be very bullish in terms of price action as well, maybe above the all-time high. And that's going to be the perfect advertising campaign to push these numbers back to what we used to see in the previous bull market around here. One thing that I'm seeing here with the active address sentiment indicator is that we are way beyond the red band. And if you scan carefully this chart, and you can even pause the video if you want, you're going to notice that 90% of the times that we are above the red, there's usually a correction. In fact, I challenge you to find and write down in the comments how many peaks above the red you can find that didn't bring a decent correction after. Here at 36K, we were above the red and we made a journey all the way from above the red to below the green. But there was almost no correction. There was just sideways action. And right after we touched the green, we pushed from 39 to where we are now. So my takeaway from this is that above the red, this is a great area during the blow of top to hold to your coins as long as you are above the red. But it's not a great time to enter. Just given the fact that 90% of the times you are above the red, there can be a big correction. One last thing that I wanted to mention for today's video is that the Bitcoin dominance is currently breaking out from this trend line. Yes, we are on a channel on the way down, but this is potentially all that's needed for a last push of the Bitcoin dominance. There can be high volatility as well coming right after that. A quick update on the bots. Moon River remains at 18% for the month. Messenger has increased to 16, Alligator 9, Scalper Aggressive 5%, Aphrodite 5% for the month. If you want to run any of these bots, you're going to find a link in the description that says copy trading bots, and you can run any combination of them. I have a new event on OKX that you can use also to claim part of the 100K USDT prize pool. There's a link in the description. You need to join the event and you can win from a MacBook Pro M3, iPad Air, Apple Watch, some USDT or contract vouchers. Thank you so much for watching, and remember to not go anywhere without leaving a comment down below. I'll see you tomorrow.